Welcome to Personal Financial Solutions. Uh, this is a special channel that deals specifically with accounting. It is called Accounting on the Whiteboard, where we present accounting topics easy for you to understand, to help you in your career, in your accounting journey, and also in your on your jobs. So today we are going to start right from the beginning. So we are asking you to subscribe to this channel. It's called Accounting on the Whiteboard. Like our videos, and also for other content we have other channels. We have personal finance, uh, money solutions to help you. We also will be setting up a channel to deal specifically with fraud and one specifically with insurance. So we're going to cover the whole gambit of information. So today we are going to deal with accounting because we are on our channel Accounting on the Whiteboard, because in today's world of high tech, right, we want to bring the accounting so simple to you that when you're finished learning the basics, you can use any accounting software, any high tech equipment to do your accounting. So we start from the beginning. Accounting is ubiquitous. That's a big word. Accounting is in your home. Accounting is in the schools. Accounting is in the universities. Accounting is in the businesses. Accounting is in churches. Accounting is in government. Accounting is in non-government organizations. So accounting is everywhere. So accounting can be a career for you, or if you're an entrepreneur, you may need some accounting, or you may stick to your core and outsource the accounting to individuals like myself who can help you with the accounting. But today we're about teaching, learning, explaining so that you can understand. So we're going to start our accounting basics with a definition of accounting. Accounting is the systematic process of identifying, measuring, recording, and communicating financial information about an organization. I also want to indicate some other areas that you should be aware with accounting. So let me expand on that definition. I will say accounting is the process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting, and communicating uh, information. So let us look at those particular key activities in accounting and see how they stack up. Well, we say accounting is a process that includes identifying. So accounting involves recognizing and capturing relevant financial transactions and events that affect the organization's financial position, or the business's financial position, or the church's financial position. So in accounting, and the initial crucial step is where we want to ensure that whatever is done in terms of money is captured in a transaction and can be uh, measured and absolutely recorded. So we want to identify first. So recognize. For example, you purchase uh, a computer for your business. So you want to make sure that you recognize that money would have spent, or if it's on credit, you purchase that computer, that a transaction, a financial transaction surrounds that event. Number two, accounting, you want to be able to measure. Now, any transaction in accounting must be able to be measured. You want to be able to measure. So that is step number two. If the transaction cannot be measured in terms of money, then it can't be recorded. So the transaction that I gave with the computer, that transaction, purchase of a computer for business use, you could purchase it for $2,000, so it's measurable. The transaction have a monetary value that you can measure. So there, the aspect of accounting that says you can measure. So we says we're going to put this here on the whiteboard. So we just want to identify those points. So the first point we identified a while ago is identify. And then we say that you must be able to measure. So I hope you're seeing the whiteboard clearly. You must be able to measure. So the transaction must be identifiable. The transaction must be able to be measured. And in terms of money, and when we say in terms of money, we are saying that the transaction now can be recorded. So step number, or the third step in the process of accounting is that that transaction that we said, purchase of a computer for $2,000 can be recorded. It means that that transaction can be recorded so far as financial data is concerned. And in accounting, the recording is done in a system that we call double entry. You make one entry to an account and you have a corresponding entry to another account. And we're going to look at these accounts because you have basically four categories of accounts, general categories. So the transaction must be able to be recorded in either as an asset, and we have different types of assets, either as a liability, we have different types of liabilities, either as income or expense. Those are the four major categories of accounts for recording of the information. So in this recording, we will say it has to be done either as a debit and or credit. We will expand upon those in a future accounting YouTube video. But let's continue with the areas, these areas of accounting. The other area, after we record, we classify. So we identify, yes, a transaction is taking place. The transaction can be measured in terms of money. The transaction now can be recorded as far as a debit and a credit is concerned. And now we classify that transaction. And we meaning that we're going to organize our financial transaction into categories of the said accounts so that we can report. So we classify it either as assets, liabilities, income, expenses. After we have done that classification, we are going to summarize. So the fifth step is summarize. When we summarize, we are basically getting a total, aggregating the financial data to produce financial statements, such as our income statement to know whether we operate at a profit or loss, the balance sheet to have a good feel of all of the assets that we own, all of the liabilities that we owe, and our worth in the business, our net worth in the business, our capital in the business. And we also want to, very important, to know our cash flow, how our money is coming in and going out. So those are the three statements that you will have when we summarize. Then after summarizing, we will do our analysis. We have to analyze. Analyze. So we analyze. So analyzing is where we interpret the financial data to assess the financial health and performance of the organization. So we look from year to year to see trends. We'll compare. Oh, we made a profit last year. We made more profit this year. Or last year, our assets grew. So that when we look at ratios, the return on the assets, we can have an amount to compare to see how the business is going. That's the analysis. In fact, if you're going to get a loan, a business loan, the banker is going to do that analysis to see whether that business is worthy. And if you're going to invest in a business and you have a financial advisor, that financial advisor should know about analyzing businesses to say, look, yes, invest in that business particularly. But in another channel, we speak about investments and so forth, and we will say maybe the index fund is the best way to invest, so that you don't have to do that individual analysis for yourself. So, but that is something we'll speak about in another channel or another broadcast. But we deal with accounting today. And lastly, after we have done that, we do our reporting. So we report the financial information, right? Or report or communicate, if you want to use that term. We'll communicate the financial information to our owners, the stakeholders, to management, to potential investors, to creditors, to the regulatory authorities, to the government, through these financial statements that we said that we will prepare. And usually we will have experts who will prepare the financial statements. And our last point here is when we say we interpret. So the financial information will be used to interpret and to make informed decision, either by an investor to invest in our company, either by management to develop strategies going forward, to cut a certain product line, to get more workers. So we will interpret. We will interpret. Okay, so let's just review, because we are looking to close our session today. These sessions are not going to be extremely long. They're going to be pointed and straight to the point. we are looking at these areas of accounting. What is accounting all about, right? And accounting is a process that involves identifying, measuring, recording, classifying, summarizing, analyzing, reporting, and interpreting financial information so that this financial information can be used to make good, informed decisions by businesses, by investors, by governments, etc. So those are the key activities in accounting. And for this first session, I just want to give you the idea of different aspects of accounting. We'll delve into them more as we move along on our journey of accounting on the whiteboard. We have financial accounting, and this is a focus on the preparation and presentation of financial statements. And these here can be done according to one of two accounting principles that is being used throughout the world. The American principle, and I studied my accounting and became a certified accountant under the American system. So we have the generally accepted accounting principles GAP. These are used in the US and other jurisdictions around the world. And we also have the International Financial Reporting Standards, IFRS. So that's financial accounting, to prepare these statements that we mentioned in here when we summarize and prepare financial statements. We also have another aspect of accounting called management accounting, and management accounting provides detailed financial and non-financial information for both internal use and external use, right? By managers and to aid in decision making, planning, and controlling. So it's more internal use for cost accounting, but it can be used externally too in some instances. So our focus primarily will be on financial accounting in the beginning, and then we'll get into some cost or managerial accounting, right? They intertwine a bit. Some people say cost accounting, managerial accounting, but if you want to be strict, the cost accounting analyzes the cost of producing goods and services to help management control the costs and set prices. We know inflation is going through the roof today, so we want to ensure that if you're part of the cost accounting department, you control costs so that goods and services are affordable to the people. You would have heard about auditing. That's another aspect of accounting, and this involves independent examination of the financial statement. So you inside will prepare the accounts, but you have an external person who will examine the account. That's the auditor, that's the independent auditor. And accounting is so wide and varied. You have tax accounting, and this is focused on preparation of taxes and providing and filing tax return to meet tax obligations. You have forensic accounting. In fact, I have a course coming up soon that I have to attend on forensic accounting. It involves investigating financial discrepancies, investigating fraud, and will use legal proceedings. So accounting, we will end by telling you that accounting is the process of systematically identifying, measuring, recording, classifying, summarizing, analyzing, reporting, interpreting financial information about an organization's economic activity. I give an example with the purchase of the computer, and to facilitate decision making and to make sure that there is good accountability. So we just want to end this first session, accounting on the whiteboard, by asking you to subscribe, hit that subscribe button, like our video, because we are going to bring accounting to you on this whiteboard here, and we are going to make it as easy and as comfortable for you. If you want particular areas for us to bring to you, send us some messages. Let us know the areas that you want. But my intention is to walk you through the process from the beginning. So we'll go through step by step. And these sessions will take about 20 minutes for us to go through. So we're going to give you small bites so that you can swallow, so that you can digest the accounting, and then you'll be able to work in any field in accounting, in figures, in numbers, because the accounting, as we say, is ubiquitous. Accounting is everywhere. Thank you for taking time to listen to this video. Share the video with your friends and family and your loved ones. This is Anthony Stewart, accounting on the whiteboard.